Hello everyone, welcome back to See Your Dreams YouTube channel. I hope that you have enjoyed lecture number 1 on CARO 2016 and welcome to the lecture number 2 of CARO 2016. So till yet we have discussed the applicability and the exemptions to CARO 2016. We also learned that to whichever company CARO is applicable, the auditor has to make certain disclosures in his audit report and he has to include certain matters in his audit report. Okay, so one by one we will discuss all the points. Also, these points require a bit of memorization. You have to memorize these points because if you will quote these points in your exam, then there are high chances that you will get good marks. For that, I'll also help you to memorize these points. Okay, and also I'll show you an audit report of Reliance Limited so that you can learn that how in reality how actually the CARO reporting is done. Okay, so one by one we will read the points and then I'll keep showing you the Reliance Limited audit report. Okay, so in that way this lecture will become more interesting also and you will get a better clarity also. So let's get started with the matters to be included in the auditor's report. So, to all those companies to which CARO 2016 is applicable, the auditor has to include these matters in his audit report. So, for that, first of all, imagine a balance sheet. When you make a balance sheet or when you see a balance sheet, you see two sides. One is your liability and second is your asset side. Okay. So, in the asset side, in most of the balance sheet, which is your first asset? In major of the cases, the first asset in any balance sheet is your fixed asset, right? So mostly all the companies have fixed asset. So that is why the first thing which you notice in a balance sheet is your fixed asset. This is a part of memory technique, okay? So I'm telling you this so that you can memorize these points also. So first asset which you see on asset side is your fixed asset. Now this fixed asset is further divided into two categories. First is your tangible asset and second is your intangible asset. You also know that as per AS number 10, now we do not call fixed asset as fixed asset, we call it as property, plant and equipment. The name has changed and we call it as PPE, that means your property, plant and equipment. Okay, so this is further divided into two categories. One is your tangible and second is your intangible asset. So in the matters also, first of all, we have to make certain disclosures on the matters of PPE only, property, plant and equipment only. Okay, so what all? Now just imagine that you are the auditor of the company and you have to make certain disclosures. You have to include certain matters in your audit report. So what all you have to disclose, just learn that. Okay, imagine that you are the auditor. Okay, so first point is whether the company is maintaining proper records showing full particulars including quantitative details and situation of fixed asset. Now what I told you that whenever you will look at any balance sheet, what you will see, the first asset which you will see is your fixed asset. Okay, so you have to report if the CARO 2016 is applicable to any company. So first of all, you have to make proper disclosures about the fixed asset. So you have to disclose in the audit report that the company is maintaining proper records for the quantity of its fixed assets and also the situation of fixed asset. It should not happen that the machine is not able to work, the machine is not able to produce anything and still the company is showing that machine in its assets, in its fixed asset. Okay, it should not happen like that. The asset should provide value to the company and also the asset should be in a proper usable situation, proper usable condition. So you have to report in your audit report that whether the company is maintaining proper records or not. Okay, so this was your first point. Now the second point with regards to fixed asset is that whether these fixed assets have been physically verified by the management at reasonable intervals and whether any material discrepancy were noticed on such verification, and if so, whether the same have been properly dealt with in the books of accounts. So this is also one of the most important part, that for any fixed asset, there should be a proper physical verification done by the management at regular intervals so that the management can update or the management can renovate. Okay, the management can either just remove that machinery, or it can repair that machinery, because the fixed assets are not only machinery, any fixed asset. So these fixed assets should be reviewed at a particular point of time at regular intervals. Okay, and also a proper record should be maintained that what was the situation of that particular fixed asset in that particular period in which it was reviewed. Okay, so you have to disclose in your audit report that whether the company has physically, that means the management has physically verified the fixed assets at regular interval. Okay, and if they have physically verified it, so whether there was any material discrepancy which was found. Okay, so if any discrepancy means difference, and if any material means important and discrepancy means difference. So if there was any discrepancy that was found, whether it has been properly dealt by the management or not. Okay, like suppose the management thinks that now this machine is very old and it will not be able to produce much. Okay, so in that situation, what should the management do? Management should have removed that machinery, but the management did not do so. So what will you disclose? That this was the situation, but management has not taken any action. And if there was any discrepancy, like if they have removed it, then you have to write that the machine was fully depreciated, it was not in a usable situation, and therefore the management has removed the machinery from its fixed assets. So likewise you have to show, and how they are done in reality I'll show you in the Reliance Limited audit report. Okay, now whether the title deeds of immovable property are held in the name of company, and if not, the details thereof. Now like suppose if the company is showing some amount of land in its asset or any building in its asset, so the proper transfer of title should also be done. That means the land and the building which the company is showing in its asset, that should be with the name of company only. Okay, so you have to make sure that whether the proper title deeds have been transferred in the name of company, and if not, then you have to provide the details. Okay, so this was your first point that was related to your fixed asset. Okay, so this was your fixed asset point. Okay, now I'll show you Reliance Limited audit report so that you can be clear that how we actually make disclosures related to fixed asset in CARO 2016 section of our audit report. Okay, I hope that you are clear till here, and if you are facing any kind of doubt, or if you are not able to understand any particular point, you can comment down. I will try my best to explain you. Okay, so just give me a minute, I'll show you a proper audit report of Reliance Private Limited. So have a look at this, guys. This is a real audit report of Reliance Private Limited, and as you have already studied the applicability, so why are the provisions of CARO 2016 applicable to Reliance Private Limited? The Private Limited was an exception, right? Why? Because there were three conditions to it. First condition was that the paid up share capital plus reserve and surplus should be less than 1 crore. But if it is greater than 1 crore, then the CARO 2016 will be applicable, right? And the second condition was that borrowing should be less than 1 crore, and the third condition was that turnover should be less than 10 crore. But if any of the one condition exceeds its limit, then CARO 2016 will become applicable. Now, do you think that Reliance Private Limited has a turnover of less than 10 crore? Or the paid up share capital less than 1 crore? No. It has greater than 1 crore paid up share capital, and it has turnover of greater than 10 crore. Okay, that is why CARO 2016 becomes applicable to Reliance Private Limited. Okay, and therefore the auditor of Reliance Private Limited is reporting under CARO 2016. So as required, see, this is how you have to disclose. When you will become the auditor, you have to disclose like this. So as required by Companies Auditors Report Order 2016, that means CARO 2016, issued by central government in terms of section number 143 subsection 11 of the Act, we give in annexure B a statement on the matters specified in paragraph 3 and 4 of the order. So what all matters we are studying now? these matters come under paragraph number 3 and 4, and so we have to disclose in that way only. So see, this is your annexure B, this is how you have to disclose. So first point we read about was fixed asset. Okay, so see, this is how you have to write. In respect of fixed asset, the company has maintained. First point was that whether the company has maintained proper records about the situation and the quantity of the fixed assets. So this is how only that you have to write, how you have to disclose in real audit report. The company has maintained proper record showing full particulars including quantitative details and situation of fixed asset on the basis of available information. The second point was that whether the management has done a periodic review and if any material discrepancy was found, whether the management has taken proper action. So this is how you have to answer. As explained to us, all the fixed assets have been physically verified by management in a phased periodical manner, which in our opinion is reasonable having regard to the size of the company and the nature of its assets. No material discrepancy were noticed on such physical verification. Okay. Then the third was title deed. Third point was regarding the title deed. Okay, so this is how you have to disclose. As per the information and explanation provided to us, title deeds of immovable property are generally in the name of company, except now they are also quoting the asset that it was written now that if it is not, so then you have to properly disclose. So they are properly disclosing also that except in case of properties acquired by entities that have since been amalgamated with the company, and except in cases of leasehold land aggregating rupees 778 crore, in respect of which lease deeds are pending execution, we verified the title deeds for immovable property acquired from April 1, 2015. So likewise you have to disclose. Okay. So I hope that you are clear that how fixed assets are to be disclosed, means the matters relating to fixed assets have to be disclosed in the audit report. Okay, now let's move on to the second point. So the second point is about inventory. So in assets, after fixed asset, what do you see? You see current asset, and current assets includes what all current assets does a balance sheet include? Inventory, then your debtors, then your cash, then your bank balance, and etc, etc. Okay, so second point is your related to your inventory. So for a proper memorization, you can write here fixed asset and you can write here inventory. Okay, so in that way all the points which are related to fixed assets have to be written here, then all the points related to inventory have to be written here. Also, this should be done in a sequential manner. It should not happen that you are disclosing fixed assets secondly and you are disclosing inventory first. It should not happen. Okay, the sequence has to be maintained properly, and that is why I am giving you these memory techniques. Okay, so what all you have to disclose regarding inventory? So again you have to disclose that whether physical verification of inventory has been conducted at reasonable intervals by the management, and again they have repeated the same lines that if any material discrepancy were noticed, whether those discrepancies have been properly dealt in the books of accounts. That means the reality of inventory, the real situation of inventory should be reflected in the books of accounts as well. Okay. Then the third point is, now your asset side is over. For CARO, I am saying that your asset side is over. Now you have to move on to the liability side. And in liability side, what all is written? First is your share capital, shareholders fund basically. Then comes your non-current liability, and then comes your current liability. Okay. So these loans and borrowings, all of these are part of your liabilities, right? So now you have to make certain reportings related to your unsecured loans, secured loans. Okay, so now you have to write about loans. Okay, so here what all you have to disclose: whether the company has granted any loans, secured or unsecured, to companies, firms, LLPs or other parties covered in the register maintained under section number 189 of the Companies Act. That means here they are writing about whether the company has granted any loans. So that means they are talking basically about asset side only. They are talking about loans and advances. Okay, and here they are talking about loan. Okay, so here basically we are talking about loans and advances. Now you already know that loans and advances is a part of your asset. Okay, so just close your eyes and imagine what all points I have taught you till yet. I have taught you about fixed asset. In fixed asset, what did I tell you? In fixed asset, I have told you that you have to check that whether the proper records have been maintained and physical verification has been done and the title deeds have been properly transferred. Then in the second point, what all I told you? I told you that you have to write about inventory, and in inventory what you have to mention? You have to mention about the physical verification and about the material discrepancy. Now third, we have to move to loans and advances. That to all those people or to all those organizations to which the company has given loans. The company has given loans. Okay, here the company has not accepted, the company has granted. That means the company has given. Okay, so if the company has given any loans, whether secured or unsecured, to the companies, firms, LLPs or other parties covered in the register maintained under section number 189 of the Companies Act, if so what all you have to mention about that? If any loan is given by the company to any of the party, then whether the terms and conditions of the grant of such loans are not prejudicial to the company's interest. That means the terms and conditions on the basis of which the company has given the loan to the parties, that interest should not be against the company. It should be in the welfare of the company, in the interest of the company only. Okay, now whether the schedule of repayment of principal and payment of interest has been stipulated and whether the repayments or receipts are regular. Now to all those parties to which the company has given a certain amount of loan, the company is also receiving properly as per the terms and conditions, as per the decision, as per the decided schedule. The company is also receiving the repayment. Okay, so this also you have to mention that whether a proper schedule has been maintained and whether the company is regular in receiving the repayments. Then third point is, if the amount is overdue, state the total amount overdue for more than 90 days and whether reasonable steps have been taken by the company for the recovery of principal and interest. Now here you have already studied, and if not, you will study in advanced accounts about uh, not for NPAs, not non-performing assets. Okay, not I was just I actually was trying to say non-performing asset, but I, as NPO, I was just defining it as non-profit organization. It is actually non-performing asset. Okay, so if the amount is overdue for more than 90 days, then we categorize it as overdue. Okay, and if it is more than that, there are various provisions, and accordingly we name the asset as non-performing or performing asset. Okay, so if the amount is overdue for more than 90 days, then the company is supposed to take a corrective action. Okay, because if you're not receiving your payment for more than 90 days, that means your payment is in danger. So you have to take reasonable steps for its repayment. You have to take proper actions. Okay, so if the amount is overdue, you have to state the total amount that was overdue for 90 days, and also you have to state that whether the company has taken proper actions for the recovery of its payments. Okay, so now you are the auditor and you just have to state in the audit report that whether the company is taking any action to receive its payment if the payment has become overdue for more than 90 days. Okay, so I hope that till here you are clear. Let us just revise this point once again, loans and advances wala. First of all, you have to mention that whether the terms and conditions are in the interest of the company. Second, you have to mention that whether the company is maintaining a proper schedule and it is also regular in receiving its repayment. And the third point that you have to mention is that if any amount is overdue for more than 90 days, that the company is taking proper actions to receive its repayment. Also, it is mentioning it that it's such and such amount is more overdue for more than 90 days. Okay, so these were the 3 points, and let me just show you these 2 points also in the audit report, and then we will conclude for today. So see, this is how they are mentioning that for inventory they are saying that in our opinion the inventories have been physically verified during the year by the management at reasonable intervals, and explained to us no material discrepancy were noticed on physical verification. Now we are discussing about loans and advances. Where has it gone? Yeah, this one. So in respect of loans secured or unsecured granted by company to companies, firms, LLP or other parties, now what all you have to mention: in our opinion, according to the information given to us, the terms and conditions of loan given by the company are prima facie not prejudicial to the interest of the company. Now they are also mentioning that the schedule of repayment of principal and payment of interest has been stipulated, and repayments of principal amounts of receipts of interest have been regular. And third, there are no overdue amounts as at year end in respect of both principal and interest. That means the company is regularly receiving its repayment and no amount has become overdue for more than 90 days. Okay, so this is how reporting is done. We will continue with the next points in the next class. So till then, if you are feeling any doubt, if you're facing any doubt, if you're facing any problem, you can feel free to comment down. And also, if you are getting benefited out of this video, then please do consider it sharing it. Okay, also do subscribe to this channel. Thanking you.